Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday, the 24th of April. We've got a marginally risk negative outlook which has developed in the last 24 hours, whereby the rebound that we saw on Wall Street yesterday fell away into the close. Actually, really disappointing end to the session, and that came on a couple of factors really. The treatment drug for COVID-19 that was being trialled by Gilead Pharmaceuticals in the US failed, basically flopped all the tests, and doesn't give a conclusive suggestion that that could be used as a decent treatment drug. And subsequently, markets fell away. The other factor was that we had an EU leaders meeting, EU Council meeting yesterday in order to discuss the potential moves towards the EU 27, the 27 countries of the EU, putting out some sort of joint collective fiscal support package. It doesn't look as though that they've been able to come to any sort of agreement, really. The old arguments surrounding debt mutualisation is still present. And that seems to be that they're dragging their feet. And this is not a time to be dragging your feet. Certainly the outlook for the euro, which has fallen away on the back of that, really does suggest that the markets are not especially happy with it. 107.70 was a key support, key April low, and that has now been broken on the back of this development. Other moves, you can see that equity markets are lower today. We've had futures buzzing around. Actually, futures on the S&P are around about 0.5% lower early on, but that's now clawed back to a little bit positive, and that's helped these European markets to pare their early losses. The dollar had been positive, had been strong early, but again, that sort of unwound some of the strength today. We saw Treasury yields, which were lower, they're now basically flat on the day on the 10-year. And it's sort of helped to sort of stabilise sentiment to an extent, but you've still got this marginal risk negative outlook, which means that the dollar is still outperforming across the Forex majors, although only slightly. Just the Canadian dollar, which is a little bit stronger. So yeah, very, very sort of slight risk off phase today. Now, we've had some data out this morning. UK retail sales came in pretty well. I was going to say negatively. I mean, they were negative. The headline retail sales 5.8% down, missed expectations. But on an ex-fuel basis, we actually saw retail sales beating expectations. When I say beating expectations, this is still sort of negative 4% for the year. So it's not great in any way at all. But still, yeah, I mean, it's not the worst bit of news you could have had. Now, you also had the German Evo data. Now, this came out very negatively, and again, not helped the euro at all today. Look at these negative surprises that we've seen. Big surprise negative on the headline business climate data, but also look at the expectations component as well. Big downside surprise there, which doesn't bode especially well. Now you can see the data here. It's fallen off a cliff, and I've sort of gone back to 2009. You can see the bottom in 2009, which was actually March 2009. So that actually was the bottom of certainly equity markets that month. But look at that plummet that we've seen in EFO expectations. So yes, surveys are still not looking great. Into the afternoon, we've got durable goods for the States. Again, expected to show declining, well, in March this is of 5.8% on an ex-transport basis. And then the Michigan sentiment, the final Michigan sentiment reading is expected to show a downward revision to 68 from 71, which 71 being the prelim. Downward revision to 68 is the expectation there. Again, not great. Okay, so let's have a look at my chart of the day, which is talking about the euro today. Euro versus the yen, and you can see, yen is a consistent safe haven option for traders, and to be honest, it's certainly playing out that way against the euro. Euro's been in decline in recent times, but certainly against the yen, you can see this downtrend that's formed throughout April. We've now I've got 1580, 115.85. Let's zoom out to there. The importance of that support, basically between that September low and the October low of 117 figure. You can see all these lows through March. Intraday sort of went into that support band and rallied into the close. March happened, early April that happened, but now we've started to break down, and the consistent bear candles that we've seen are now breaking on an intraday basis 115.85, which isn't great, and it certainly suggests that rallies are a chance to sell there. You can see the downside potential through these MACD lines falling away, stochastics, but RSI at mid-30s. I mean, it's been down to the 30 area in February, and even then you wouldn't say that that's exceptionally oversold, given the fact that in August it went to the low 20s. So there is downside potential in this RSI. If you do see a closing breach of 115.85, well, the next real support comes in at 114.80. Let me just undo that and then zoom out. You can see that. But that comes back 3 years. 3 years, that level of support coming in at 114.80, and then you're looking at the 112. So yeah, this euro yen does not look happy at the moment, and it certainly suggests that we're going to get some further weakness, and a closing breach of 115.85 is on the cards. I think at the moment you'd be selling into strength. You've got the downtrend that comes in at 16.85. Anything around that 17 big figure I think is a big resistance now. On the hourly chart, you've got 1720 pivot line, sorry, not pivot line, a resistance in the past week or so to maintain that outlook of negativity, but anything towards 50 area, maybe even 60 on our hourly RSI is a selling opportunity. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.